which makes these comparable in some states that offer additional tax credits to a Toyota Camry. So really, the Model 3 with multiple tax credits is becoming a mass market vehicle, which is just an incredible thing to see. It around $25,000 if you live in states like California or even Colorado.
You know, $85 price target still. I mean, what's got to happen for you to be right here?
I'm going to be right. So remember,
how do you know you're going to be right? What are you going to be right about? Tell me.
All the analysts have price targets below where the stock is today. The average Tesla price target, about 50% are bullish, is about 192. The stock hit 227 today. You look really foolish as an analyst with a buy rating and your price target's below where the stock is. So over the next couple of weeks, as people put out their second quarter previews, you're going to see a rash of price target increases as people catch up to where the stock is. And that'll be good for the stock as well.
In today's utterly delicious video, Gary Blake calls out the NPC Wall Street Analysts who will soon be upgrading their Tesla stock price targets, not because anything fundamental has changed in their investment thesis, but because they're embarrassed that Tesla stock's now higher than their price targets. NPC has gone NPC. One of the dimmest supposed analysts on Wall Street, who may or may not in fact be a shill, why else would he say what he says, gets exposed, called out and ridiculed in real time on CNBS. Good job, David. And in a stunning about face, and I do mean stunning, literally one day after I roasted the Yahoo Finance clowns for making no sense and being constantly negative about Tesla, the very same two clowns who I roasted yesterday have suddenly reversed course and now saying things that make sense about Tesla. What a weird coincidence. This is going to be good. By the way, if you didn't see the 2 exclusive videos I posted on Patreon yesterday, check out the link at the pinned comment. And I posted 2 exclusive Twitter subscriber only videos today. I've been a busy boy. Check the link to the pinned comment, or don't. I won't be mad, but you won't get to see the content. That's how it works.
What this tax credit does is it helps not only stabilize demand, but potentially increase it over the course of the year. They've guided for 1.8 million vehicles. And I think that most people expect them to sort of kind of hit that. But what could help them quite a bit is in their margins, because they could get to this target without having to cut prices further, because frankly, the federal government is helping them do that. And if you think about what it costs to buy a Model 3 in the United States, they're getting a $7,500 tax credit if you meet certain income requirements, which makes these comparable in some states that offer additional tax credits to a Toyota Camry. So really, the Model 3 with multiple tax credits is becoming a mass market vehicle, which is just an incredible thing to see. It around $25,000 if you live in states like California or even Colorado.
He ain't wrong. Incredible deal in some states in particular. Oh, and should I say it? I'm going to say it. What do you think happens when Tesla drops their $25,000 vehicle, which will also be eligible for the same incentives? Did you think about that? I did. Still buying Tesla stock with every spare cent.
Yeah, you know, George, I was adding up those tax credits today as somebody who lives in California. It is a huge, huge discount when you think about it. But Tesla's not the only car maker, at least in the EV space, that is getting that kind of sort of double credit, right? That the federal tax credit as well as whatever the states are offering. How do you think Tesla competes in that environment when things are becoming increasingly crowded in the space?
Look, Tesla has a lead in EVs, a very strong lead, particularly on the mass market side, and they can make money at those price levels. I mean, look, we cover a company called Rivian that's a competitor, but they have a niche product, a very, very good product with a high-end SUV and truck. Those don't qualify for these tax credits, but this is a completely different marketplace. And the GMs, the Fords, we don't cover them, but at this particular price point, it becomes very hard for them to make money in this $20,000 to $30,000 range for EVs. Tesla can do it.
He's right, and this is really important. Tesla doesn't need these incentives. It's going to make their vehicles even more affordable to consumers. Some cases up to $15,000 more affordable. I suspect Tesla's going to be forced to raise prices on the Model 3 so wait times don't become too absurd. However, Tesla does not need these incentives, but they'll take them. Funnily enough, the company who least needs these incentives is going to be the biggest beneficiary. That's Tesla's reward for having the vision, insight, and courage to move in this direction 15 years before most other automotive manufacturers even considered it viable. Seems like karma with a capital C. Get it? Because that was really bad.
And it's really their ability to have full vertical integration that's allowed them to do that. They make battery cells. They even mine and process materials. They have this autonomous driving software called FSD that can add to margins. I mean, the way we think about their business, it's razor blade, meaning that they sell these vehicles at a 20-ish% gross margin, and they hope to penetrate and get additional high gross margin software sales over time through adding on full self-driving. Now, right now it's priced at $15,000 for that option. We think it's very, very compelling, but it's getting a lot more expensive, particularly relative to the price of the car that seems to be going down in price, either through Tesla's works or through federal tax credits. So we're advocating for a price cut for FSD from $15,000 maybe to the $10,000 range. But that really helps their margins over the long term.
Accurate. Just to be clear, Tesla already makes more money selling vehicles than any other automotive manufacturer on the planet. Maybe one or two exceptions like Ferrari, but I mean, it's not really apples to apples. A $350,000 micro-penis compensating vehicle with huge profit margins versus a mass market vehicle, different. But when talking about mass market vehicles, no one's making more money selling the vehicles than Tesla. And Tesla's the only company who can sell this $15,000 software package on top at any point in the future after the customer's already bought the vehicle. It's almost pure profit. But remember, Tesla's just a car company. And also, the competition is coming.
George, when it talks about the potential here of FSD, there was talk earlier this week, Elon Musk saying that he would be open to licensing the technology. Of course, there was also the partnership with Ford last week for its charging network. Do you think that's a smart move here going forward for Tesla, just in terms of licensing some of the technology that they have already perfected at this point?
Look, it could be. We'll have to figure out how that works and what kind of price they offer. We actually initiated today on 2 companies in autonomous driving. We called our report AI for the streets because ultimately these are AI companies, right? Not only is Tesla an AI company, but a company like Mobileye who initiated on, or Aurora. These are really, really interesting stories that create a product that has a lot of AI embedded in it. So if companies really want to move forward and have strong autonomous offerings, they have a couple options. And on the passenger side, right, today, they could potentially do something with Tesla. We'll see how that works out. They could also use something from Mobileye. And over the long term, maybe even something from Aurora. So they'll have multiple options. But on the passenger vehicle side specifically, we think Tesla is in a very, very strong position, as is Mobileye.
You talk about the vertical integration that has really been key to Tesla's success. And, I'm thinking too, as a driver, the benefit of having something like a Tesla is the infrastructure that is already in place for those Tesla drivers. As we see more and more offerings within the EV space, how much of that becomes a real advantage to Tesla? I mean, it already has been, but now that we're talking about affordability for the car, to what extent does that become an additional lever, additional reason for drivers to say, look, this is why I'm going with Tesla?
What a strange change of tune. It was only yesterday I was roasting the very 2 female anchors we've just heard, making absurd statements about Tesla, just embarrassing themselves out loud on air. I mean, like I said, it was in their job description. You must support and or denounce the current thing. The current thing is Elon bad, Tesla bad, and also Tesla doesn't advertise in our network, so wait, why would I? That's totally irrelevant. Anyway, the point I'm making today, suddenly, they're being reasonable, acknowledging Tesla has a lead, and what's going on? I mean, it's good to see, but why the change of tune? Surely they didn't see me roasting them, did they? Of course not. As if they'd be watching YouTube. Weird. But hey, it's a step in the right direction.
That's a great question. So what we've seen so far is that through vertical integration, Tesla has been able to offer vehicles at a low price and still make money on them. What we'll see in the future, and what we're seeing from a company like Rivian, for example, is that what vertical integration does is it allows features to be downloaded over the air. And it sounds like it's easy, right? We all have it on our smartphones, for example. But in order to enable real over-the-air features, like something Rivian offers called camp mode, where it literally changes the suspension of your vehicle, you have to be able to write software at a system level. You have to be able to write the braking software, the motor software, and all this stuff that today a company like Ford, for example, buys from hundreds of independent vendors. As a matter of fact, there was a recent interview with Ford's CEO where he described this very phenomenon. So these companies have to be built up from the ground and have to embed a Silicon Valley, a software type infrastructure and culture that's really hard to do when you're re-engineering your company. And companies like Tesla and even like Rivian have done that from the ground up. They started with a clean sheet of paper. And so that kind of that DNA allows you not only to have low prices, but also really great feature sets.
More facts have been spat. It's a nice change of tune when instead of debunking garbage, I'm actually saying, yeah, I agree. This guy gets it. He makes sense. Good point.
So does Rivian present the biggest threat to Tesla? I mean, clearly we've established that you're very bullish on Tesla. What is that one car maker that you think could really offer or could present the biggest threat?
I think we don't cover them, okay, but I think that over the long term, and we've written this in our reports, the market will be Tesla and maybe a couple other OEMs on the traditional side. We think Rivian has a very, very good chance, but it's the Chinese OEMs that present a global threat to Tesla's dominance. And it's the same way the smartphone market has worked out. We have Apple and we have a lot of very successful Chinese vendors. So, and maybe Samsung too. And that we see the EV market really structuring itself long-term in a very similar fashion to the smartphone market.
What are the odds? I tweeted this yesterday. By the way, I've been saying the same now for years, but anyway, recent tweet. The timing on this couldn't be more coincidental. It's 2030. The list of the top 10 selling automotive companies by vehicles sold. Number 1, Tesla. Numbers 2 through 10, Chinese EV makers, with 1 or 2 stunning exceptions of legacy automotive companies that miraculously didn't go bankrupt and are still selling meaningful numbers of EVs. George has just said essentially the exact same thing. Clearly, we agree. I think it's safe to say George gets it, or we're both wrong. I'll leave it up to you guys to decide which is which.
Let's bring in Roth Capital's Craig Irwin, $85 price target, neutral rating on the company. What's leading to this surge that we've seen lately, Craig?
So there's two things going on. The first, I would call out that, Tesla's obviously, a very successful company in EVs. EVs are inevitable. They created the market, high quality. It's a darling. People want to own it. So any good news, they want to buy a little bit more, and it's a positive trade. It's a momentum trade. Second thing is, and I think people are misreading this, but on June 3rd, we had the announcement that they would future sales of the Model 3 rear-wheel drive vehicle, right, which is their highest volume vehicle, is going to be eligible for $7,500 in federal credits under IRA versus $3,750, just prior to that, which was on for a space of a number of weeks. Obviously better subsidy levels are good, and there's been kind of news that Panasonic wants to increase its battery manufacturing in the U.S. In the space of these recent days. But it appears there may have been the first detention of batteries coming into the U.S. under UFLPA. And that would be a major complication. And there's also,
what does that mean?
So December 2021, UFLPA was passed. It handles the sensitive issue of forced labor in product content and certain Chinese regions. So it's the policy to exclude all products made with forced labor. And CBP only did their first enforcement in June of 22 for solar, right? My colleague Phil Shen did some really impeccable work around this. This looks like we now probably have our first enforcement action for batteries. And sort of the person raising the flag, his name is Richard Mujica. He was intimately involved in the first Chinese OEM to have this issue for U.S. customers. So, there's going to be a lot of changes. I don't know if this is good. I don't think this is. I think this is bad.
So I thought I'd let Craig continue to embarrass himself and not interrupt until he was done, just in case you missed it. Apparently, Tesla rejigging their global supply chain in order to become eligible for the full $7,500 tax credit is not actually why they're now eligible for the full $7,500 tax credit. Instead, it's a great opportunity for Craig with his brilliant researchers to discover some terrible, horrible things happening within Tesla. Insert the word child labor and or slave labor. Great way to say it without saying it. Craig is working from the Gordon Johnson playbook right now, claiming that this is not a good thing, it's a bad thing. Can Craig substantiate these claims? Unlikely. But that doesn't matter. He gets to appear on CNBC and use the word child labor. Remember, this is the very same guy who multiple times has said, and I quote, directly, Tesla doesn't have anything that Toyota doesn't already have. The same guy. So clearly he's very trustworthy, rational, reasonable, makes a lot of sense and says things that accurately describe reality, especially when it comes to Tesla and the automotive industry. You can trust Craig.
You know, Craig, listen, when you come on with us, I always respect your obstinacy, but, you know, $85 price target still. I mean, what's got to happen for you to be right here?
I'm going to be right. So remember,
how do you know you're going to be right? What are you going to be right about? Tell me.
Love to see it. Now, I've got to give credit to David Faber here. He's always reasonable and rational, at least when it comes to Tesla. He may have his internal biases, but he doesn't let them show. Amid a sea of FUD and stupidity among his co-anchors on CNBC, he's consistently said, well, hang on, guys, what about, and just brings up reasonable points. I like the fact that he's now verbally assassinated Craig Irwin in real time on CNBC. Craig there, by the way. God damn, dude. He just seems so timid. He doesn't believe what he's saying. Oh, I'm going to be right. I'm going to be right. David immediately, how do you know you're going to be right? A good question. Just like I don't know I'm going to be right when I tell you I'm going to be right. But when I am right, I look forward to clipping the clips when I said I was going to be right before I knew I was going to be right. I think the key difference between Craig and I is I believe I'm going to be right. I say this with confidence and conviction. Craig seems extremely timid, sheepish, and like he doesn't actually believe that he's going to be right. Kind of pathetic, to be honest.
About 100 EVs that are coming to market this year, 100 new EV models, and they're going to pressure Tesla significantly to the back end of the year, just like we saw last year, right? You know, Tesla's valued at a massive premium to Toyota, sells a tiny fraction of the vehicles. They don't have anything that Toyota doesn't already have.
Couldn't have planned this better. There it is again. Tesla doesn't have anything that Toyota doesn't already have. Now, is it just me, or does the inflection in Craig's voice seem to suggest he doesn't believe what he's saying, or he's suffering from testosterone deficiency? Serious question, by the way. I'm not sure which is which, but something seems a little bit off there. Doesn't sound convinced of what he's saying. Understandably so, because what he's saying is utterly absurd.
Right. So what they have is, you know, a focus exclusively on EVs. And they have a story around robo-taxis. But that story is nothing but a story. We're not seeing any taxis anytime soon. You know, other people could take as aggressive positions in the technology. You know, I, like many, just find it a little bit scary when you have these apparitions in front of you causing false braking, you know, in the FSD systems. So, you know.
Just to be clear, I didn't do any sneaky editing there. I think Craig just had a 404 error, a bit of a meltdown in real time. Like, oh, shit, how do I get out of this one? Just to make sure everyone understands, Craig definitely believes everything he said there, and everything he said there makes absolute sense. And he's going to be right, because he said he'll be right. Very confidently too. Not that you can't be wrong if you're very confident that you'll be right, but it's not a great sign if you're not even confident you're going to be right.
You believe that truck, assuming we ever actually get it, will be able to raise earnings and thus compress that multiple?
Look, at 46 times, you got to compare that to about 37% long-term growth in earnings. So it's got a PEG ratio about 1.2. That's similar to Google. That's similar to Meta. You compare it to like Apple. Apple's got about a 27 PE. It's growing at about 10%. If you think about NVIDIA is about the same multiple, and it's growing at less than that, like 25%. So we think, if you think about why Tesla has moved up so much in the last, as you said, the last 10 days, you got a bunch of things. One, people are thinking the second quarter gross margins are going to bottom. You haven't seen any more price cuts like you saw earlier this year. So that's important. The China volumes have been very, very strong. Elon is clearly more focused on Tesla. He hired somebody to run Twitter, Linda Yaccarino, and that'll allow him to get out of Twitter, and Twitter will turn cash flow positive sometime this year, and that'll allow him not to have to put any more money into it. But the big thing is going to be Cybertruck. Cybertruck, if you see it, you either love it or you hate it, but it's going to drive news to Tesla. It's going to get people to go to the website. It's going to get people to go to the stores. And just like in 2020 and 2021, you saw volumes explode in 2021 at Tesla. It was up about 87%. We think volumes next year, meaning 2004, will be up over 50%, where the street's looking for up 27%. And that's what has to happen. You got to beat expectations.
So Gary makes some good points there. In particular, the Cybertruck is, in essence, a driving billboard. It's going to generate a lot of interest in Tesla's other products, not just Cybertruck itself, and it will materially impact Tesla volume. Who knows, however, how it impacts Tesla stock. Speaking of Tesla stock.
The other thing you should just pay attention to is all the analysts have price targets below where the stock is today. The average Tesla price target, about 50% are bullish, is about 192. The stock hit 227 today. You look really foolish as an analyst with a buy rating and your price target's below where the stock is. So over the next couple of weeks, as people put out their second quarter previews, you're going to see a rash of price target increases as people catch up to where the stock is. And that'll be good for the stock as well.
I agree on literally every one of those points. Oh, and by the way, weird coincidence again. You remember Derp, right? Of course you do. Tweeted this yesterday. Breaking, leaked photo of NPC Wall Street analysts about to upgrade their Tesla price targets. Not because anything material has changed in their Tesla thesis or valuation model, but because Tesla is now above their price target. If your fair valuation changes because the stock price changes, not because something material has changed about the company and your investment thesis, you are a clown. And I guess that means that, on average, Wall Street stock analysts are a circus. Gary's right, by the way. Just so you know, if you see analysts upgrading their price target on Tesla stock, chasing after the stock, and they're not publishing updated valuation models to reflect changes, going, oh yeah, we believe margins will be this, that. If nothing's changed in the valuation model, they come up with some bullshit excuse for why they're increasing their price target, they are exposing themselves as a literal clown. They do not know what they are doing. They have no foundation as to why they're upgrading their price target. They're simply embarrassed by being wrong and chasing after the stock. For those curious, I exposed Morgan Stanley's probably the last 3 or so years of their price target history on a Twitter subscriber-only video recently. It's quite an indictment more on Stanley. And to be fair, if something material does change in Tesla's valuation model, no problem. If it looks like margins are going to be higher or lower, they're going to sell less or more vehicles than you previously had assumed, and you change those numbers, your price target should automatically change as a result. That's another red flag. If the price target isn't a direct output of a valuation model, but instead is a number that is made up and is completely disconnected and independent of the valuation model, the price target is once again produced by a clown. So I think what I'm trying to say is stay tuned for the Wall Street clowns and NPCs to, one after the other, begin upgrading their Tesla stock price targets and then reverse engineering an excuse, a reason as to why they've increased their price target, other than we're embarrassed because Tesla's worth more than our price target, therefore we're updating our price target so we look less like idiots. Sorry to rain on your parade, guys, but changing a price target to chase after Tesla stock, in fact, draws more attention to your idiocy. Doesn't cover it up. By the way, a special shout out to the few, and I do mean the few, exceptional analysts on Wall Street who actually have brains and testicles and used both of them and didn't begin chasing Tesla stock down and reducing their price targets for no reason other than Tesla's down, making changes only when something material changed, such as obvious evidence Tesla's margins will be a little bit lower than expected over a short period of time. These are the folks who deserve praise and respect. Everyone else, NPCs, part of the hive mind, no idea what they're doing other than embarrassing themselves. And with Tesla stock having more than doubled year to date, from lows in the near $100 range, yes, literally 6 months ago, not even, Tesla stock almost $100 per share, never made sense. I was pretty clear at the time it didn't make sense. And by the way, Tesla stock today in the 200 still, to me, does not make sense. And I mean, doesn't even close to make sense. Again, if you'd like to see my fair valuation, which didn't change when Tesla stock started falling, and hasn't changed as Tesla stocks increased and more than doubled this year, head over to Patreon. My Tesla fair valuation is available to all supporters at all levels. But I would just like to take this moment to once again ruthlessly roast and ridicule all the clowns who sold Tesla stock, panic sold Tesla stock near $100 per share. There is no valid intellectual reason as to why you would have done that. There are plenty of emotional reasons as to why you'd have done that, but as we know, emotions have no place when it comes to investing. If you're one of the folks who did happen to panic sell, you've learned a valuable lesson. You are not cut out to invest. Period. Unless something changes dramatically in your psychology, you're probably better off not vaporizing your money. Just lock yourself in a cupboard at home, you'll stay safe, nothing can possibly hurt you, and you won't do any harm to yourself. Some people just are not cut out for investing. These are the facts. Sometimes the truth is hard to swallow. Isn't it amazing, by the way? The same week Elon Musk heavily wades into the what is a woman discussion, clearly the single most controversial topic he's ever engaged with, Tesla stock didn't collapse. It's almost as if Elon Musk having opinions has nothing to do with what Tesla stock does. But don't tell that to the previously angry / extremely deranged fund managers who were pounding the table telling Elon to stop sharing his opinions on topics because it was destroying Tesla stock. I've left a lot of corpses in my wake today, haven't I? Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.